In today's video, I'm going to go over how to analyze income statements again in Excel. This time, I'm going to show you how we can track changes from one period to another to help explain what happened for a company, why its earnings changed, why it may have gone up or down. And Excel can be a really useful tool in helping you to do that. An example I'm going to use today is Amazon. And I know I go to Amazon a lot, and that's because, last year or 2022, it had a surprise net loss for 2 straight quarters. And for the first 6 months of the year, its net loss was a negative 5.8 or 9 billion here, right? So it was a pretty surprising performance for the company, just because this is a normally highly profitable business, and so going into the negative definitely raised some eyebrows. So what I'm going to show you how to do is how we can take the values from the company's earnings report and convert it into a waterfall chart to help show where the gains or losses took place and how the company went from a profitable position a year ago into a negative. Because obviously looking through all these numbers, it can be a bit overwhelming initially to look at it and to figure out what exactly happened, because there's a lot of numbers. Some are increasing, or some are decreasing. So it's a bit of a mix of everything. So I'm going to show you how we can populate this into Excel. So what I'm going to start with is just taking a screenshot of this and showing you how we would enter this data. And so I've taken a screenshot here, and the point of this is to help show you exactly how you enter this data, because sometimes it can be a little confusing whether you're entering a positive or a negative value. So for starters, what I'm going to do is set up some headers here for current, previous, and then a change. And sometimes you might see something like B or W, better or worse, and that's helpful in this case to sort of understand what it is we're doing here, or what direction it should be going into. So I'm gonna enter in the headings that from Amazon's earnings reports. So we had revenue, cost of sales, fulfillment, technology, sales and marketing, general and admin, and it had a little bit of other expenses. So I'm just gonna group those all together. Same with other income and income tax. So to enter in this properly, I just want to make sure that I'm copying the same values consistently. So we've got items like net sales or revenue. So those are going to be positive amounts. Same with any sort of expenses, because we want to treat expenses as positive as well. It's only when stuff's going in the opposite direction where we want to put in negative values. For instance, we've got other income down here. So in this case, it's a negative because it's offsetting the expenses. So that's how I'm going to enter it. So I just want to put it, because it's all in this area of other income and expenses, I just want to be consistent in putting in any expenses that are in the expense area as positives, and any income items that are in again the expense area as negatives, sort of just to make it easier logically to format that later. So I've set it up so now I got it side by side, so it's easy to see. And so for the current values, I'm going to pull from this last column here that has the 22 values for the 6-month period. So revenue is going to be a positive 237,678. We've got cost of sales of 132,923, fulfillment 40,613, technology 32,914, sales and marketing 18,406, general admin of 5,497. Now for other expenses, this is where I'm just gonna need to be a little bit careful as to what I'm including, because we've got other expenses here. So the normal value is a positive, so it's positive 339. So I'm going to add 339, and then we've got interest expense here. Now it's showing up as a negative because, again, this is a bit of a tricky area because we're in this other income and expenses section where, expenses are showing as negatives and income is positive. But I kind of want to keep it consistent in that keeping the expenses positive. So in this case, I'm going to add 1056, even though it's showing up as a negative here. And this one, it's in parentheses, so that's telling us it's an expense. So again, I'm going to add that one as well, 14,115. So you just want to be careful to make sure that you're calculating things the same way, regardless of how you're doing it in your spreadsheet. It just needs to be consistent. That's all, right? And so for income, I'm gonna put in negatives here to offset these expenses, because these are sort of like contra expense accounts in my mind. We've got interest income offsets interest expense in that sort of sense. So minus 267, and then that's really the main one on here. So that's really it. So, and for some reason Excel's, there we go, not calculated that one properly. We've also got income tax as well, which doesn't show up on this screenshot, but if I load it up on here, we can see that for the 6-month period, we've got a benefit in parentheses, a provision, so that meaning we had to put aside money for our future and current taxes. But because it's a positive value here, that tells us it's a benefit, so it's offsetting expenses. So I'm going to enter that as a negative. And there's also this equity method investment activity net of tax. This is a negative 13. So 2059 minus 13 nets out at 2046. And because that's going to be a net benefit, I'm going to put that as a negative because it's offsetting my expenses. So this is probably the most confusing part about entering this stuff into Excel, is you just want to make sure your symbols are in the correct place. So I'm going to convert this into dollar signs here. Let me just get the formatting back. And so the one thing you're going to want to do is double check that this calculates correctly. So I'm going to do, I'm going to take the revenue value and then subtract the expenses afterwards, right? Because normally expenses are showing up as positive. I just do a simple summation of that. So we had a loss of 5872. Flipping back over into the earnings report, we can see that net income loss was minus 5872. So that is correct. So now I can go back to entering the prior year period's values. So now again, I've got my split screen here. And so with the previous values, I'm going to do the same thing, except now entering the values from the column for 2021. So 221,598 for revenue, cost of sales 126,579. 34,168, 26,359, 13,731, 41, 45. And again, now we're getting into the other income and expenses section. So again, here we're looking at other expenses. So this is a positive. So that tells us an expense, 49. So now let's look for any other expenses. We've got other expense of 834 for interest expense. So add 834 to that. And for here, for other income and expense, we do not have a negative value indicating expense, so I'm going to skip over that one. So just 883 for our other expenses this time around. And for other income, again, I'm going to treat this as a negative. So we've got interest income of 211, and then we're also going to minus, remember, this income amount, other income, 2958. So that's a positive amount here, so that tells us it's income, not expense, which would be in parentheses, right? So now subtracting 2958. So minus 3169. So that is going to be offsetting our other expenses. And once again, I'm going to have to flip back to get the income tax amount. So before we had that 2059 benefit, this time we've got a provision, means we have to set aside some money to cover our tax liabilities. So it's going to be 3024 minus 7. So it's going to net out to 3017. So that's going to be a positive amount. Positive amount because it's an expense. So let's use my format painter to copy this over. Control R to copy my formula. 15885. So let's check if that is correct. So flipping back into here, we've got a net income of $15.85 billion. So that looks to be correct. So now we've got these values correct. We've checked that the net income or loss appears correctly. And now what we're going to do is calculate these better or worse calculations. And so if revenue was up, obviously that's a positive change. So in this case, we're taking the current value minus the previous, because if the current value is more than the previous, that's a positive. But if the current expense is higher than the previous, that is worse, in which case it's a negative. So we could do the same thing and just multiply by a factor of -1, or we could take the value in the C and deduct the value in B, because if C is higher than B, that means our expenses are lower in the current period, which would be a good thing, right? In this case, our expenses are higher in the current period, so when you do C minus B, it's a negative, which is worse, which is correct, right? So now I'm going to copy this all the way down here, and now we have our cumulative changes. And so again, let's calculate these in total here, and to see that they add up to our, so if we do our auto sum here of this, we've got a change of $21.75 billion, right? So that, let's do a check to make sure that is correct, right? 21,757. So that is the correct change from one period to the next in terms of net income and loss. And so what I'm going to do now is chart this into a waterfall chart. So I'm going to select this, go to Insert, Charts, and go to All Charts, and select the waterfall. And what I'm going to do is right-click, select data, because I don't want everything. I'm just interested in the change, because that's the beauty of a waterfall chart. It shows you the net change. I'm going to select the decrease so that that one shows up as red. For the increase, that one's going to be green. And then I can get rid of the legend entirely, because now I know obviously what's positive, what's negative. So we can see that, initially we had revenue jump by 16 billion, but then cost of sales was worse, fulfillment was worse. So all these costs went up. And the benefit of a waterfall chart, it can quickly direct our attention to the largest items. In this case, other expenses. So $14.6 billion. It's a massive increase. So that already, can get our attention. Although there were all these other items that had a negative impact on the company's earnings, the most significant one on its own was the other expenses section. And so let's jump back to that one. And so here, back on the company's income statement, we see other income and expense of minus 14,115. So that's that big glaring number here that, because operating income up until this point was just under 7 billion. It was down, but it wasn't quite negative, right? So what sunk Amazon into the negative was this other income and expense line item of 14,115. And so you may be wondering, okay, so what does that mean? So what you can do on an earnings report, if you're trying to figure out what something relates to, is just use Control F, right? So you may want to search for the description or the amount. So I can do Control F, type in 14,115, and it gets us to other expenses. So we see quickly that there's a marketable equity securities valuation loss of $12.6 billion. So let's look in the notes here. It says it included a valuation loss of $3.9 billion and $11.5 billion for the 6-month period from their investment in Rivian Automotive. So that's what effectively drove Amazon's earnings into the red for the 6-month period, because obviously Rivian stock had been struggling in 2022. And so those losses that Amazon incurred on that went into its earnings report and brought down its earnings into the negative. So that was a really big factor that caused it to be negative. Now, obviously, you can say that there were obviously all these other components that led to the company's significant decline in profitability, but as we saw with the operating profit, Amazon didn't actually go into the negative until factoring in these other expense items, which again were heavily weighed by investment losses. So as you can see, the big benefit of using a waterfall chart when analyzing income and expenses in an income statement is that, diverts your eyes to the big areas. Like, things like general administrative expenses aren't going to grab our attention just because it's such a small piece of the pie. Same with other income, not huge. We may notice that in general its expenses went up by comparable amounts, whether it's technology, fulfillment, or cost of sales. Everything went up by similar amounts, but the really big one was definitely the other expenses. So this is where putting the values into an Excel spreadsheet can be really useful because it makes it easy to visualize the data. And the only thing to really watch for when you do this is just to make sure that you're entering expenses and revenue items consistently. Because, like I said, from looking at the earnings report, there's a lot of positives and negatives. You want to make sure you're reading that correctly, just to make sure that you're not entering expenses as income items or vice versa. And a good way to check that is just to make sure that after you've entered in all those values, you're arriving at the same net income or loss figure as is on the company's earnings report. If you are, then you've got all these things entered in correctly and going in the right direction. And then once you've got that, the next step is just to calculate this better or worse column, which is pretty simple because aside from revenue, everything else is going to be going in the same direction. And then once you've got that, plot it into your chart, and then you can visually analyze the report as opposed to trying to look through number by number, one item at a time. So that's how you can use waterfall charts to help analyze your income statement and help understand how a company went from, in Amazon's case, an earnings position to a loss position so drastically and so quickly. And so, hope you found this useful, and thank you very much for watching.